Let's bring in today's market panel. Gary Kaltbaum, Capital Management President, Scott Martin, Kingsview Asset Management Chief Investment Officer. They are both Fox News contributors. Gary, the whole world is focused on the shutdown, but here we are talking China trade deal. Which do you think matters more to this market up 3 days in a row?
Oh, I think shutdown is a 1 out of 100. I think the trade deal is much more important. A deal will get done, I'm sure, in the next 30 to 60 days.
Really?
But China's going to continue. But China's going to continue to cheat and lie and steal going forward. They're just going to make like they're not, and nobody's going to say anything, and both parties are going to claim like everything's A-OK.
Scott, don't you think they'll do a little less cheating and less lying and less stealing? No?
Maybe they don't steal the cheat sheet, Melissa, from the person next to them, but maybe the person in the back of the classroom. I mean, that's how I got away with it. Oops. Because here's the thing. Gary's absolutely right. This is all about optics. It's all about everybody saying, hey, we're talking for 3 days. We're getting along. We're going to sneak a meeting with President Xi in Davos. You know, all those rumors. We've been fooled before, kids. I don't think this is any different. China's history, as Gary pointed out, is they're going to cheat, they're going to lie, they're going to steal, because that's what they do. We got to get used to it. Hopefully, though, the IP thing gets reconciled. That's one of the maybe lowest hanging fruits of this issue, where maybe we don't have to partner with Chinese companies anymore once the business goes over there.
Cheating and stealing, though. So, I mean, if you resolve that, that's a big deal.
That's the one, though, Melissa, though, that if a company can go over there now and do business freely without that partnership, that could be one way that stuff could go away. The other stuff, currency manipulation, all that stuff, that's still on the table as far as I'm concerned.
All right, more on that in a few minutes. Let's talk about the Fed right now with President Trump, again, taking aim at the Federal Reserve for, in his view, stifling economic growth. In a tweet earlier today, he wrote economic numbers looking really good. Can you imagine if I had long-term zero interest rates to play with, like past administrations, rather than the rapidly raised normalized rates we have today? That would be so easy. Still, markets up big since the 2016 election. Now, Gary, I'm less interested in kind of rehashing this back and forth between the president. Look at you shaking your eye. Between the president and the Fed chairman, than talking about what the chairman himself had to say on Friday and whether that was really a sea change, some sort of watershed moment for the markets. What do you think?
Well, first off, Friday, I was live on TV in the 10 o'clock hour when Powell said those magic words, and I immediately changed my stance on the market, and I've been very bearish up until that point. I really do believe that the central banks have been controlling and moving and manipulating markets for a very long time, and they're pretty darn good at it. So that mattered a lot. Look, as far as the president, I wish he would clam it up. You know, when he wasn't the president, he complained that the Fed was making bubbles and it's going to hurt things going down the road. Now all of a sudden he's talking about 0% interest rates again. I don't even know where to start. My head is spinning.
Right, but your point was, and Scott, I'm curious what your view is, that with all of that, Jay Powell, independent of what the president has been saying, made some important comments on Friday that seemed to change a lot of people's minds, including Gary. Scott, how about you?
Well, he did, and I agree with Gary. I mean, that did change the tune. I mean, it's getting to the point, guys, where I don't know what Jay Powell Fed we're going to get. We're going to get the hawk, we're going to get the dove, we're going to get the guy that's a hawk dressed as a dove. And he's right. I mean, look, here's the thing, though, about Trump's comments. Don't you want a more normalized environment so that when we do look back on this legacy, whether it is 4 or 8 years, there was actually a normal environment? I mean, he knocks this Obama administration, era, but that was like something where it was a Fed-induced bubble, a Fed-induced stock market. Wouldn't you want the Fed to act maybe more responsibly so we have, real growth, real business confidence, real spending for once versus what we had in the past 8 years before Trump got in there?
That seems very logical. Stop that. Oil is up for 7 sessions in a row. It's the longest winning streak in a year and a half. Let's go to trader Phil Flynn at the CME. I mean, Phil, is this it? Is oil back?
I think it's back. It's back. It's bad. It's coming back. And it should, because I think the economy is still very strong. Oil demand is pretty good. We did get a warning from the World Bank a few minutes ago that said there's dark clouds on the horizon. The economy is going to slow, but it's still going to grow at 2.9%. And a lot of traders are talking about the Saudi put. We've heard about the Fed put. Hey, if the economy gets really bad, they're going to lower interest rates or slow the interest rate hikes. Saudi Arabia is doing the same thing with oil. They're coming out giving you the Saudi put. They're saying if prices go down, we're going to continue to cut production. We want $80 a barrel, and we're going to do whatever it takes to get us there. Now, whether they can do that or not, we don't know. But oil traders are believing it for the last 7 days, and we're coming up pretty good.
All right, Phil, thank you. Awesome.